Good afternoon. Hey guys. This is accountant Deja Mary here, and I was sitting here measuring some metrics for one of my companies, and I wanted to share some key takeaways with you guys today. The key performance indicator, or the KPI that I focused on, was payroll. So in today's video, I want to talk about KPIs, because if you aren't tracking these in your coaching and consulting business, then it could be the missing piece to keep you on target with not only hitting your goals, but exceeding your goals while remaining profitable. So that's what we're going to talk about today. But before we get into it, if you guys are new to me, hey, hi, and welcome to my network. My name is Deja Mary. I am an accountant, a CFO, a tax strategist. You can call me either of those three. And I help multi-six-figure coaches and consultants make millions while paying little to no money in taxes. We're able to do this through business tax preparation, accounting, and CFO services to help you manage and maximize your taxes and bookkeeping. So let's talk about it, guys. Key performance indicators. Now, a performance indicator, also known as a key performance indicator or KPI, you can use all three of those words simultaneously. It's a type of performance measurement. Have you ever heard the saying, what gets tracked gets measured? If not, that's totally okay, but keep it in mind. What gets tracked gets measured, and what gets measured can be repeated. I think this was one of the best things I've learned in my career so far, because it's really helped me to be intentional about hitting my goals. So keep in mind, what gets tracked gets measured, and what gets measured can be repeated, because oftentimes success is simply the repeated periodic achievement or some level, it's the repeated periodic achievement of some level of operational goals. So for instance, if you think about your percentage close rate, that is an activity that we can specifically measure in your business. If you think about, customer satisfaction, maybe one of your company goals is to have a 10 out of 10 customer satisfaction rate. That's an activity that we can specifically measure in your business. So oftentimes success is simply the repeated periodic achievement of some level of operational goals. Other times, the success is defined in terms of making progress towards strategic goals. So every single day, getting closer and closer to your goals. So choosing the right KPIs relies upon a good understanding of what's important to your company. You have to decide what are those money generating activities for your company, and what are those key performance indicators to let you know that you're on track to hitting your goals, whether it's per week, per month, or per year. Then once you figure out what's important, you have to prioritize measuring the performance. So it's one thing to say, okay, these are the things that we're going to track, but you have to actually measure the performance. So whether you're doing that by department, if you have multiple departments in your coaching and consulting business, or you're doing that by the company as a whole, you should measure the KPIs proactively. And when I say proactively, I mean you should be measuring them on a monthly, if not weekly basis. Some people even get a little bit more granular and track their metrics daily, but minimally weekly or monthly. Typically, your accounting or your management team should help you manage these metrics. So keep in mind, don't beat yourself up if you are overwhelmed with business tasks and you are overwhelmed with everything else that's going on in the business, that you don't really have the time available to track these metrics. That's typical, especially as you're growing your business. It's going to be more and more common. The more clients you start to work with, the higher your income becomes, the more responsibilities you have. You may not have the time to track your metrics on a regular basis, and that's when you want to outsource it. You want to get an accounting team that can help you track these metrics, because at the end of the day, it's important to your bottom line. Or you want to have someone teach your management how they can track these metrics on a regular basis. So here are my takeaways from what I measured today. So one of my company goals is managing payroll. The reason why managing payroll is important is that you never want to overpay in payroll and hurt the company's bottom line, but you don't want to underpay and not be able to retain good talent. We know that it's important to have good talent nowadays. You know, it's hard to find good talent, so you don't really want to underpay as well. So finding a good balance is important so that you remain profitable. So here are three things that you want to consider when tracking payroll as a KPI and determining how much you can afford to pay, because this is one question I get often. How do I know, how much I should pay my virtual assistant, how much I should pay my business manager, how much I should pay my OBM, how much do I pay these people? So we're going to talk about that today. Here are three things you want to consider when tracking payroll as a KPI and determining how much you can afford to pay. Number one, you want to consider, what is your revenue goal? What is your revenue goal? Now keep in mind, you're tracking these KPIs on a monthly or weekly basis. So when you're looking at your revenue goal, you need to know what your revenue goal is for that month. Now, this is what I see a lot of entrepreneurs do. They'll say, okay, I want to make 6 figures this year, so that means I need to make $8,333 every single month for 12 months. And while that is a start to setting your goals, that's not the end all be all, because how many of you know that more than likely, unless you're selling the same products and services and it equals that amount on a monthly basis, you're probably not gonna achieve $8,333 every single month. One month you may only achieve $1,000, while another month you may achieve $16,000. So it just depends what your monthly goals are, but this is how you can kind of break that down. So when I say break down your revenue goals, I mean at the beginning of the year you should be creating a business budget. You should be able to forecast your revenue for the remainder of the year, your revenue and expenses. It is important as a business owner that every single year you have a budget for the year and you are able to forecast your income and expenses. Well, what does that mean exactly? You're going to figure out how much income you want to make this year. So if I want to make, let's stick with that 6-figure mark. If I want to make $100,000 this year, instead of me breaking up my goals to $8,333 times 12, I'm going to look at my historical data over the last 3 years. So I'm going to look at what I made in it's 2022 right now. I'm going to look at what I made in 2021, 2020, and 2019 to get an average of what I should make this year. And how that's helpful is because instead of you having these outrageous goals, of let's say $20,000 or $40,000 in 1 month, when this is a month that could be slow. It just consumers could not, be spending money around this time. Every business has its own feast and famine months. So instead of you, just throwing a number out there, now you're looking at, okay, what did I make in June of 2019, in June of 2020, in June of 2021? I'm gonna take these 3 numbers and now I can average to see what I plan on making in 2022, right? Now, there's a caveat to that. That means that you actually need to be tracking your bookkeeping, right? You actually should have bookkeeping in place. And if you don't, let me just tell you, that is one of the foundational pieces for business owners, for online coaches and consultants, is your bookkeeping. After you create your LLC, after you get your EIN number, after you open a business bank account, you should immediately start your bookkeeping. It doesn't matter if you haven't made $1 in a business just yet. That first dollar that comes in, it needs to be tracked on a consistent basis. Why? Because you want to be able to go back to the prior year, the prior 2 years, 3 years, 4 years, 5 years, and be able to pull that historical data so that you can better forecast what your company plans on making this upcoming year. So that caveat is, if you don't have bookkeeping in place right now, you are leaving thousands of dollars on the table in missed deductions because you aren't proactive with your bookkeeping. So going back to your income goal, at the beginning of the year, you're going to create that budget. You're going to see what your averages should be for each month. So in June, you may not have to make $8,333. Maybe June's goal is just $6,500. And now you can base what your payroll should be based off of how much revenue is coming in. So the last thing I'm going to say about that is when you're forecasting your budget at the beginning of the year, you need to get granular on the vision, right? Flush this out in a granular way. And what I mean by that is break down how much revenue you want to make, but also break down your expenses. You should know how much you plan on paying out in payroll. What percentage of the revenue do you plan on paying out in payroll? What do you plan? How much in operating expenses do you expect to have? How about owner's compensation? What you're paying yourself? How about investing? How about taxes? How about profit? Because you want to remain profitable, right? What percentage of profitability do you plan on having in your business? So you should always start the year off with a forecasted budget, and then you should be checking in quarterly to make sure that you're on track with hitting that budget. So the first thing you're going to do when you're tracking payroll as a KPI and you're determining how much you can afford to pay is, what is your revenue goal for this month? For this month. We're just looking at this month, right? You need to know for the year so that you can break it down for each month. And you need to have that historical data so that you know what that forecasted amount is. Number two, what should my payroll cost for the month be? That's a question that you want to ask yourself. What should my payroll cost for the month be? So the best way to figure this out is to do it by percentage. I just had a client, we were on an accounting session, and they asked me this. They said, well, if we have a fixed cost, what if the company doesn't make that much money? You know, where do we get that money from? I said, well, you'd have to borrow it. You'd have to invest into your company to pay it. You'll have to figure out how to pay it. So that's one reason why I don't necessarily, it depends on the business model, let me say, but in your coaching and consulting business, maybe payroll should be a percentage of income. So if you know that you plan on making $100,000 this year, maybe payroll should be 20-30% of that. It can be even low. Like, don't get me wrong, you can create a really lean business model around coaching and consulting, and it may not be at 20-30%, but let's say max you are at 20% for payroll, right? So we know that at least $20,000 of that $100,000 that we make, that's going to go to payroll. Now every single month we can make sure that we're on track to stand under that $20,000 mark, to stand under that 20% mark. Does that make sense? And then lastly, number three, you want to measure that KPI proactively and make adjustments accordingly. So what I mean by that is, once you figure out, okay, here is my revenue goal for the year based off of what I made in the 3 prior years or the 2 prior years, however much data you have available, this is what we're forecasting we're going to make this month. Then you're going to figure out the percentage. This is the percentage of payroll that we should pay out. So for instance, if let's say for the month my revenue was $7,000 and my payroll cost should be under 20%. That's $1,400. So I know that my team as a whole, whether it's independent contractors or employees, my payroll needs to be under $1,400 to hit my goals. Now, will there be some months where it's a little bit higher? Yes, but there will be some months where it's a little bit lower, and it should balance out. If you notice that it's not balancing out, you've gotten to June and you've noticed that January through June have been extremely high, this is why you need to be measuring it proactively. And so that when you catch this, now you can figure out, okay, why are our payroll costs so high? Where can we cut back? Is it a matter of cutting back hours? Is it a matter of figuring out what tasks I'm assigning to my virtual assistant, what tasks I'm assigning to my bookkeeper, what tasks I'm assigning to whatever contractors I have, and make sure that I'm getting a return on my investment. Now you can proactively make key business decisions because you have the data in place to do so. Does that make sense? What questions do you guys have about tracking payroll as a KPI and determining how much you can afford to pay? Number one, you want to determine what is your revenue goal. Break it down for the year and then break it down for the month. Number two, you want to determine what should my payroll cost be for the month. And I recommend doing a percentage for payroll. So that way you always have enough income in the business to cover it, right? And I have a really cool spreadsheet to help you track that percentage and what it should be on a monthly basis. So if you need help with that, let me know. And then number 3, measure that proactively and make adjustments accordingly. Remember, what gets tracked gets measured, and what gets measured can be repeated. So you want to make sure that you're tracking it, if not monthly, then on a weekly basis. So if you don't take anything away from this video, take away the fact that what gets tracked gets measured. Okay? Now, as a coach or consultant, you may find yourself wondering what additional KPIs you should track to stay on target with hitting your goals. If you want to continue the conversation and create a SMART plan to hit your goals, y'all remember what SMART goals are, right? Specific, measurable, attainable, realistic, timely. We're going to create a SMART plan that's going to help you reduce or manage your payroll costs efficiently, so that you remain profitable throughout the year, right? Go ahead and schedule a call with me using the link in the description of this video so that we can continue the conversation and discuss your next best steps. Was this information helpful? I hope so. And until the next video, be blessed.